guys, today we're going to be talking about EBITDA, earnings before interest, tax, depreciation, and amortization. What is earning before interest, tax, depreciation, and amortization? So EBITDA or EBITDA. My old finance professor used to say EBITDA. EBITDA 말고 EBITDA. It's so hard. It's like how Koreans are pronouncing impje as in INFJ. It's not INFJ, it's impje. And you're like, why? How? So, anyways, side story. So this is a measure of a company's overall financial performance and is used as an alternative to net income in some circumstances. EBITDA, however, can be misleading because it strips out the cost of capital investments like property, plants, and equipment. This matrix also excludes expenses associated with debt by adding back interest expense and taxes to earnings. Nonetheless, it is a more precise measure of corporate performance since it is able to show earnings before the influence of accounting and financial deducts. Okay, simply put, EBITDA is a measure of profitability. While there is no legal requirement for companies to disclose their EBITDA, according to US generally, accepted accounting principle, GAAP, according to US GAAP, is that GAAP? Okay, that's what I thought. It can be worked out and reported using the information found in a company's financial statement. So this is contained in the financial statement, which we still haven't which we still haven't learned yet, right? Or how to read the balance sheet. The earnings, tax, and interest figures are found on the income statement, while the depreciation and amortization figures are normally found in the notes to operating profit or on the cash flow statement. Oh my god. PTSD. I hate cash flow statement, income statement. I can't read the financial statement yet. So remembering those two words, it was kind of disgusting. Sorry guys. The usual shortcut to calculate EBITDA is to start with operating profit, also called earnings before interest and tax. So this is how much you earn, not including not cutting tax. So it's like when you guys give me bits, like 1,000 bits or 10 gifted subs, then I get $50, right? That's because that's before interest or tax, right? Then add back depreciation and amortization. So then if you guys give me 10 gifted subs, I get my earning before interest of $50. But then if I add back the depreciation and amortization, I think I get like $25. That's all for today. Guys, streaming sucks! Just kidding. I think that's about it though. What does interest mean in this context? How much money Twitch takes, and then how much money it costs to transfer to my bank. So guys, support me with bits, because then you guys are in charge of the depreciation and amortization, not me. Moving on, key takeaways. Earnings before interest, tax, is widely used metrics of corporate profitability. EBITDA can be used to compare companies against each other and industry average. Oh, I didn't know. What is industry average? EBITDA is a good measure of core profit trends because it eliminates some extraneous factors and provides a more accurate comparison between companies. EBITDA can be used as a shortcut to estimate the cash flow available to pay the debt of long-term assets. Okay, so there is formula and calculation. Interest would be interest from loans as a company. Oh, yeah. 몰라. If you're asking like the real definition of interest, not in terms of Twitch, then ask a different person on chat. Like, I'm learning with you. Don't ask me anything. Stay away. So, EBITDA formula and calculation. EBITDA is calculated in a straightforward manner with information that is easily found on a company's income statement and balance sheet. I hate these two. There are two formulas used to calculate EBITDA. One that uses operating income and the other net income. The two EBITDA calculations are, guys, write this down. EBITDA equals net income plus taxes plus interest expense plus depreciation and amortization. That's everything just added. And EBITDA equals operating income and depreciation and amortization. So you just add everything. So isn't like interest, expense, and tax going to be minus? Understanding EBITDA. EBITDA is essentially net income with interest, tax, depreciation, and amortization added back. EBITDA can be used to analyze and compare profitability among companies and industries as it eliminates the effects of financing and capital expenditures. EBITDA is often used in valuation ratios and can be compared to enterprise value and revenue. What is valuation ratio? 이건 뭔지 모르겠다. So how much like the how much the company is worth in ratio terms? Does that make sense? That sounds kind of weird. Interest expenses and, to a lesser extent, interest income are added back to net income, which neutralize the cost of debt and the effect that interest payments have on taxes. It would just be easy to think of it as another way to value a company. So everything that I've been reading, it's been like, this is just to value a company, but it's not completely trustworthy. Or though I think it would be a poor measure. So like if you're quickly doing a investment to a company, then you should check like the EBITDA number so that we can check their profitability. But in the long run, this shouldn't be the only thing that you should trust to invest in a company, right? Is that kind of like what I should be saying? Or is that what I should be understanding of EBITDA? Okay. Hey, I've been getting better at understanding these hard concepts. So we made big progress. Income taxes are also added back to net income, which does not always increase EBITDA if the company has a net loss. Okay, companies tend to spotlight their EBITDA performance when they do not have very impressive net income. So EBITDA doesn't reflect much on the net loss. So if you're doing bad, this is what they show. It's not always a telltale sign of malicious market trickery, but it can sometimes be used to distract investors from the lack of real profitability. That's so mean. A valuation ratio shows the relationship between the market value of a company or its equity and some fundamental financial matrix. So I see why you're saying that it would be a poor measure. Because they don't really know what this fundamental financial matrix is, or like the background of it, right? Company use depreciation and amortization accounts to expense the cost of property, plants, and equipment or capital investment. Amortization is often used to expense the cost of software development or other intellectual properties. This is one of the reasons why early stage technology and research company feature EBITDA when communicating with investors and analysts. Management teams will argue that EBITDA gives a better picture of profit growth trend when the expense accounts associated with capital are excluded. While there is nothing necessarily misleading about using EBITDA as a growth metric, it can sometimes overshadow a company's actual financial performance and risk. So if your company, or if the company that you're interested in is only showing their EBITDA, or they're marketing their EBITDA price way too much, then that's a red light. Right? This is like making one number from balance sheet and income statement without understanding anything about those things. That's what you think EBITDA is? As a general rule, you should look at all valuation number, not just one number. Yeah, but what if you can't read the other valuation number like me? 못 읽으면은 망하는 거죠. So someone like me who's not educated properly with financial investments, yada yada yada, would be completely tricked when a company goes, look at my EBITDA number, it's so good that it's worth investing. And I'll just be like, oh, some fancy financial terminology. And then I'll probably Google search it and it'll be like, oh, it's like the profitability, blah, blah, blah. And you'll be like, oh, this company makes so much money. Yeah, I should just completely just like, I trust this company and like do so good, right? Seems funny to use a beta number. Yeah, I wouldn't be doing that because I haven't been properly educated in this. So if a company might be like, hey, just look at how much we sold and as long as we don't have that tax issue, we would be great. Then it's like, people, oh no, be careful. So let's moving on. EBITDA and leveraged buyout. So first came to prominence in the mid-1980s when leveraged buyout investors examined distressed companies that needed financial restructuring. They used EBITDA to calculate quickly whether these companies could pay back the interest on these financial deals. Leveraged buyout bankers promoted EBITDA as a tool to determine whether a company could serve its debt in the short term. These bankers claim that looking at the company's EBITDA to interest coverage ratio, 진짜 근데, like, they have so many fancy words. EBITDA. Do I pronounce the da a lot? 칼국수님 어서 오세요. Would give investors a sense of whether a company could meet the heavier interest payments that it would face after restructuring. For instance, bankers might argue that a company with EBITDA of $5 million and interest charges of $2.5 million had interest coverage of 2, more than enough to pay off debt. EBITDA was a popular metric in the 1980s to measure a company's ability to service the debt using in a leveraged buyout. Using a limited measure of profits before a company has become fully leveraged in a leveraged buyout is appropriate. EBITDA was popularized further during the dot-com bubble when companies had very expensive assets and debt loaded that were obscuring what analysts and managers felt were a legitimate growth number. EBITDA. Oh, Ibiza? In a British way? EBITDA. 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 So I should say EBITDA. 왜 이렇게 발음 어려워? Why don't they just say EBITDA? EBITDA? 웹, 에비타 아니야? 에비타, 에비타. 내가 네 앱이다. 앱이다. Hate this word. Why can't they just be like EBITDA? Yeah, I'm pronouncing it very Asian. I realize that every time I read this word, it sounds super Asian, and I just, it's very cringy. So, continuing, guys, let's, like, can we move on with the pronunciation? Unless I'm completely saying it wrong to a point where people can't understand what I'm saying. But, cause the drawbacks, because I have no time. I have 8 minutes. We're gonna rush through. Oh, it's so interesting. So the drawbacks is that this does not fall under the above mentioned gap as a measure of financial performance that we talked about. This is a non-GAAP measure. Its calculation can vary from one company to the next. It is not uncommon for companies to emphasize EBITDA. 너무 싫어. Emphasize EBITDA over net income because it is more flexible and can distract from other problem areas in the financial statements. An important red flag for investors, to watch is when a company starts to report EBITDA prominently, but hasn't done so in the past. Oh, see, like what I just said. This can happen when companies have borrowed heavily or are experiencing rising capital, and development costs. In this circumstance, EBITDA can serve as a distraction for investors and may be misleading. So this ignores the cost assets, the working capitals, and then there's varying starting point. So while subtracting everything and different companies use different earnings figure as the starting point of EBITDA. In other words, EBITDA is susceptible to the earnings accounting gain found on the income statement. Even if we account for the distortions that result from interest, taxation, depreciation, and amortization, the earning figure in EBITDA is still unreliable. I think EBITDA is a distraction in your reading completely because I'm so getting paranoid with my pronunciation because now it really sounds Japanese. Hi, Ethan. I'll try to ignore it and try my best to think of it as EBITDA. So, finally, obscures company value. Worst of all, EBITDA can make a company look less expensive than it really is. When analysts look at stock price multiples of EBITDA rather than at bottom line earning, they produce lower multiples. Oh, so this can make company look less expensive. Consider the historical example of wireless telecom operator Sprint Nextel. On April 1st, 2006, the stock was trading at 7.3 times its forecast EBITDA. That might sound like a low multiple, but it doesn't mean that the company is a bargain. As a multiple of forecast operating profits, Sprint traded at a much higher 20 times. The company traded at 40 times its estimated net income. Also, EBITDA. Oh shit, how'd you know I didn't understand it? Basically, 나 이거 이해 못했거든. I was like, wait, so what does this mean? Oh shoot. Saying it makes stock worth it at that price, but it really isn't. Stop reading my reaction. Go away. I need a mask. Business can play crazy games with depreciation. So with EBITDA, oh my god, now it sounds so Korean. Okay, I need to stop. Okay, but with this, I could make my investors think that stock is worth much higher or much lower. Because do you want your stock price to be lower? Much higher. Ah, to increase. Ah. That's a fraud. But it's somewhat legitimate because it's EBITDA number. EBITDA number. Okay, I need to stop. Focus generating. This is why there is gap. Oh, so like investors look at it and be like, oh, this stock should be higher price. So it'll go up. Oh, so they make it seem like it's undervalued, so then people buy it. It's legal because they're not lying. This is a legitimate number that they're showing. But it's not incorporating other things. Guys, that's all for EBITDA today. I hope you guys enjoyed learning about EBITDA. It is a certain quick ending, but I have a meeting in 2 minutes, so I have to rush out. So Jinri's definition of EBITDA is that, first of all, the pronunciation is really hard. I'm sorry if I've been pronouncing it wrong, but guys, really should not judge a company by EBITDA. You know, using kind of that phrase of, you know, never judge a book by its cover. It's like, never judge a company by EBITDA, guys. Or else you're gonna get red flagged and you can't do anything with it, because this is like a legitimate way of determining, like it's been done in the past, like 1980s. Is that what they say? But it just seems that I just don't see why people are still using this and not looking at other material. But I'm sure there's very limited times EBITDA can be used, but it should generally not be relied heavily upon. Yeah, but it would be interesting to see where this methodology or this way of, you know, financial performance can be useful. Because for now, I just feel like, why would people use this? If you can read cash flow statements or the balance sheet, use that rather than this. But yeah, I guess we found out a good way of preventing investing in a company that shows only this number. That's what I learned today. So if they are starting to be like, hey, we're at this value because of this measurement, then I'll be like, okay, this company, I don't trust you anymore. So that's something I'll look into. That's all for today. I hope you guys enjoyed it.